But what about petrol prices and the price of houses? Bob Weston is the managing director of Weston Homes, which is based in Takeley. Bob, welcome aboard this morning. How do you as a house builder feel about the future? What's going through your head?
Well, with the Brexit vote, it's all about the uncertainty. When we get reality, we will just deal with it as we always have done. But until we get certainty, it's going to be difficult. And we won't see anything coming through in the markets, I don't think, for about 6 weeks, and probably Christmas before we get any even view of how the world is going to shape.
How has the boom been for house builders? Has it been a good couple of years up until this point, or?
Up until last week, everything was extremely good. Business was very good, and it was very stable for the next few years, as I say, until last Thursday. What
are people saying then that maybe we're going to commit to buying a new house? Are they concerned about interest rates and mortgages, etc.? Is that what possibly stop them?
I think it's just pure uncertainty. Looking on the horizon, interest rates won't rise. If anything, they're likely to go down because of uncertainty. House prices, how are they going to fare? It's difficult to say, but there are the core underlying things that we are undersupplying new homes, and we have been for decades. So we're still going to be building less than is demand.
So at this moment in time, are you going to hold off, and how long are you going to hold off before you invest in buying new land and building new houses? How long will you wait?
Well, I think all of the developments that are in the pipeline continue in the pipeline, and whatever happens, that we will continue with those. When we're looking at buying new land, we have to continue to invest in land because we've got to keep feeding our machine to keep employment high within our industry. Demand will stay reasonably high, but I just think we're going to have a period of cooling off while people reflect.
This is BBC Essex. Ronnie Barbour. This is BBC Essex.
Morning. Ronnie Barbour with you through it until 9, then Sadie is with you. In this hour, we're talking about finance and in light of the exit vote. I want to hear from you on this one. Has the exit vote, made you worry about your money? Maybe you put off buying a house or booking that holiday. If it's changed your mind in that way, I'd like to hear from you. 0300 240 41, and on the text 81333, start your message with Essex. I'm joined in the studio by Bob Weston, MD of Weston Homes, based in Takeley, and Simon Dan Woodruff as well is with us, an independent financial planner based in Colchester. Simon, welcome aboard as well to our kind of think tank. Bob and I have been thinking, so you can come into. Dan, I just was saying there, just with the talking to the listeners about planning for the future and everything. What are you telling your clients as an advisor, financial advisor? What are you saying to them?
Well, it's interesting. I didn't speak to any clients on Friday, and I don't know if that's because they're well trained or because they were in complete shock. But I spoke to most of our clients yesterday. Spent all day on the phone, and everybody is slightly shell shocked by the result, but nobody's making any snap decisions. And I think that's the wisest course of action at the moment. Don't panic. Don't sell everything. Don't just carry on as normal as far as possible, because we don't know what's around the corner, and we don't necessarily. My overall message is look towards the long term rather than this short term volatility and shake up of the economy. Things are going to be obviously difficult going forward. There are going to be many shocks coming our way, but that doesn't necessarily mean you shouldn't carry on doing the same things you were doing before.
Because there is a connect between you and Bob in the sense that Bob's trying to sell houses, and you're advising people on mortgages. So he's waiting to see if you're going to get people mortgages.
Yeah, the mortgage market is slightly different. I mean, I think what Bob said earlier is probably correct. There's no real reason to think that mortgage rates are going to go up. In fact, if anything, they could go down because the economy is so shaky that the Bank of England would be slightly crazy to put rates up in the short term. Normally why they would do that is because inflation is going up, and that is certainly on the horizon potentially anyway. But I don't believe that they would put mortgage rates up. The issue for me is the stock market at the moment. The stock market went into quite an unusually steep decline over a couple of days. This does happen all the time. It does go up, it does go down. What was unusual is it went down quite so far, particularly in the UK focused companies in the sort of smaller than the FTSE 100. We've been downgraded by some ratings agencies, and effectively that's the credit rating of the UK. So what that means is that the government in the next round of borrowing, where they try to borrow money next month, they're probably going to find that more expensive to borrow. So some of the money we were talking about recouping back from the EU could be going out in debt payments the other way. And these are the kind of uncertainties that we face as an economy now.
Bob, are you reassured what Dan was saying there about mortgage rates? They could possibly go down. Does that help you at all as a house builder?
Well, I think interest rates have been at record low for 10 years, and that I don't see on the horizon them going up. They may well go down, as Dan says. There could potentially be a move by the banks to increase their margin slightly, but that may be offset by a reduction in base rate. So generally speaking, the finance costs should stay pretty much the same.
Do you buy any sort of stock at any sort of building stuff at all from Europe, or is it all British-based suppliers?
Well, we buy worldwide,
right?
So we tend to buy a lot of it in dollars. So Friday morning we could have seen a 20% increase in our import prices, but it's still relatively a small proportion of what we do, and those fluctuations happen all the time. And I'm sure the dollar, over the next few weeks, months, will recover somewhere along the line.
Dan, inflation, because again, it's fairly good at the moment as well. And talking about that, the credit rating, so the money that maybe the government was going to use for hospitals is going to have to be as we buy credit. Do you think there's going to be a big increase in inflation?
There are indications that could be the case, I suppose. If you think about, we import more than we export, therefore any kind of uncertainty with the oil price, with the price of exchange rates across various countries, it's going to increase costs. And if we import food particularly, I expect that to go up. So we're going to see some things change. And I think what Bob said earlier is absolutely right. We've just got a big period of uncertainty. We don't know how long it's going to last. We don't know who's going to be leading the ship. So we just have to sort of batten down the hatches and expect that to continue. It doesn't mean you have to change your long-term plans. If you've got money invested, let's say, it doesn't mean you have to pull all your money out, because actually you may just be locking in a loss. You may find yourself down the line regretting that decision. So my overall message to people is to carry on as you are, because you've got to think about the rest of your life, not the next 6 months. I
have a private pension, because I'm self-employed, and so whenever I see the stock market fluctuation, I go, well, there's another lot.
That's an argument for diversification in your portfolio. Okay, it's quite a technical way of saying spread your money around. So my experience of most amateur investors is they put too much money in cash, probably not a bad thing at the moment, and too much money in the UK stock market. Just to give you a flavour, on Friday, the UK biggest companies were down by about 3-point-something%. So many of our portfolios were up on the day because they're spread around various different geographical regions around the world and in different types of assets. One day's evidence doesn't tell you too much, but what it does tell you is if you can spread your money around, that spreads your risk, basically.
Bob, because we did talk there about investment in the future and keeping the jobs going, in light of what we're hearing and in the light of the uncertainty, are you confident you'll be able to maintain your workforce as you've got? And are you likely to increase your workforce? Are you likely to take more people on?
Well, over the last 2 years, we've increased the direct workforce in the business by around 40%. Economy cycle, we go through cycles. We are at a much higher level of workforce now than we were in, say, 2007. So it's part of a cycle. I see no reason at all why the workforce would need to reduce. And I certainly haven't told my HR department to stop recruiting. We still have an awful lot of vacancies and we still want to fill them.
And what about, and we've been talking about the Eastern European workers being, sort of, in some cases, been told to go back home. What about you in the likes? Do you have many European workers working for you, Bob?
Through the subcontractors that work on our sites, there is a high level on certain areas, and it's quite patchy depending where you are. but there can be some quite high levels. You know, if you're inside the M25, it can be as high as 60%. But Great Britain PLC is pretty much in full employment, and there aren't a lot of people waiting to do these jobs.
Is it hard to recruit?
It is very, very difficult. The construction industry, particularly over the last couple of years, has been very, very difficult to recruit.
Because that's what we're always hearing, isn't it? That we want to employ so-called British workers, but they aren't actually there.
No, they're not. We are in full employment. I know there is technical unemployment, but in general terms of the economy, we are generally in full employment.
Dan, you're taking a sort of longer view, and are you optimistic about the future?
Yeah, I mean, I think what I was saying to people before, I don't know if people were necessarily listening to me, but I was saying that we should expect 18 months of uncertainty if we vote to leave. I'd see nothing to change my opinion so far. I know it's only a few days and things will hopefully stabilise, but of course there are just many other issues down the road that we have to face. So we just have to expect this to be the norm for a while. But of course, we're fundamentally a strong economy. I think there's been some hard work done in the last few years. And speaking to many business owner friends, we have done well in the last few years generally. And things have improved. So we've got to build on that, haven't we? We've got to be optimistic, and we've got to push forward with that in mind, I think.
Bob?
Yeah, we do have to carry on, and Dan's absolutely right. Probably about 18 months of uncertainty, and literally day by day it's going to unfold. Next week we'll have an idea who the leader of the Conservative Party might be. We'll have to wait and see about who the leader of the Labour Party might be. But day by day it unfolds, and as it unfolds we will have to steer our businesses through those directions.
I've got to ask you this just finally. As two businessmen, what do you think of the behaviour of the politicians over the last 4 or 5 days?
I think it's been a truly terrible campaign. I mean, I think most people would agree on that. It's been very divisive, and it's just been interesting to hear people that agreed so much before really disagree so strongly. So we need leadership now, and that's where we've got the vacuum. We need to fill that void, don't we? And we need a plan. What strikes me is that there was no plan. I mean, if you looked at some of the leading politicians the day after, they looked like they were at a funeral. It was shocking to watch, actually.
Bob?
Yeah, absolutely. The campaign, I think, was terrible on both sides. Here we are, 3 or 4 days after the exit. Oh, we didn't really mean 350 million per day. Well, that was never true. And I think the campaign should have focused on the positives of Remain or Leave rather than all the negatives. But we are where we are now.
Bob Weston, Managing Director of Weston Homes, and Dan Woodruff, Independent Financial Planner, thanks for coming in today. And maybe if I'm still here, or James is still here, 18 months, maybe we'll be sitting here, we'll have the big Cuban cigars going, we'll be rich, boys. This time next year, Rodney, we'll be rich, we'll be millionaires.
Thank you.
Thank you very much.